Hi there, Frank here for premium members for the trading day of February the 18th, 2026, a Wednesday. Let's review the opportunities here. And first of all, let me just mention that on our website, the premium page, we have a detailed inventory of all the opportunities, of which there are many right now. So if you are a member, then please make sure that you do log in. You go to premium, and the daily analysis you see, and all the charts are here for your study. Now study these carefully. Which one you're going to pursue probably depends on your plan and on your risk management rules. All the little details of successful trading, make sure you study these charts. If you click on them, of course, you can have a bigger view, you see. Now in this video, we're just going to go through the main ones here. So first of all, indexes, ES. No action item at this moment. However, if this had wanted to sell off, probably it would already have sold off. So this is still holding on here, a sideways market, no real sell-off, no panic, bottom tails, each little low is bought up here, you see, actually a little higher each time, well, except for this one. So I would probably say that the upside move is more likely at this point than a downside move. That's how I see it. Now, how you want to pursue this, it's really up to you. This is not a setup in our book. As I said in the last video, I think that the way I approach these opportunities, because it is an opportunity, is to basically wait for a breakout and then trade the first pullback. If you want to be more aggressive, that's fine too. You can pick a spot at which point you decide to go long. This could be the break of this candle, for example, or the break of this candle. Now, a failure is always possible. Even after the breakout, a failure is possible. There's no guarantee that the first pullback always succeeds. This is always a struggle between market participants. All we can talk about is likelihood, probabilities, which comes from our, well, 2-decade-long, actually now, data analysis. Let's look at the other ones too. Please note the potential hook on the MACD, the Remek MACD, that is. This is a potential hook which points to the upside from here. Again, that doesn't mean that we have to enter right now. It just means that this is what we expect. Same thing, same situation as on the ES. Okay, moving on to YM and RTY. Let's check out those guys as well. Here we go. No sell-off. So I would say that an upside move, subtle accumulation leading to higher prices, I think is more likely at this point. Okay, and RTY. Actually, RTY is giving us a setup right now. Look at this. You may be long already on this. If not, then watch this. This is what we call a secondary bull flag. This is actually quite a bullish scenario. And again, you can wait for the algorithmic signal, which will come if price moves, definitely. Or you can just watch the break of this candle and size it appropriately and go long. Okay, let's move on to currencies on which we have to be patient. Again, these things, they take time, you see. We're not in a trade because this setup here on the 4-hour hasn't triggered yet. And if there's no trigger, there's no entry. Just remember the standard caution. There's always some counterindication in every situation. On this one, it is the blowout candle, the climax, the exhaustion candle on the weekly. That's not a good sign. And that might point to a potential failure of this structure, of this long structure. British pound. Now check this out, 4-hour chart. This is how we read price action. This is a potential failure test. We'll see what happens, but this could be the first sign that this market is actually turning back up to the upside. If we do get triggered, then count me in for a long on the British pound, but we have to get to 137 first. So this is how I think about these situations. Of course, this is all algorithmically programmed with our software. So if you don't want this storytelling, then all you have to do is watch the signals, you see, because the signals are mathematically calculated optimal entry points into the market. Just check out this beautiful, for example, story here on the Japanese yen. Look at these short signals. You see, this is more than half a year of good trades here on the Japanese yen. And no doubt, if we do turn around, then we're going to get blue long buy signals here because the algorithm only runs the math and cannot make a mistake. That doesn't mean that the outcome is guaranteed. The outcome in trading is always probabilistic, but we talked a lot about that in other videos. Right now we have a concrete long setup here, which if it gets triggered, I think it's worth pursuing. Okay, let's move on to some other asset classes, commodities. Let's talk about CL a little bit. We're hanging on to this long on CL by the thread. Again, if we do get stopped out, a couple of ticks down and we're done. We're following our rules. Don't really care too much about it. But if we do stay in, then we might climb back up to 65 and eventually 68. So let's see. And on to, not much to do on gold and silver, but let's have a look because we haven't for about a week. Now again, no sell-off here. You see, this was an obvious climax of a runaway market, parabolic market, never a good sign, and there's not much we can do except for looking for an ante, and I think an ante in this case has failed. This is now more likely to move back up. That doesn't mean that we have to do anything about it unless you want to, and if you do want to, then you can try along by putting a stop in this area. If you get stopped out, then we're done, but if we stay in, then we're going to target 56. Same thing on the SI actually. This is a situation where it doesn't happen too often. You see this bottom tail and the 65. The 65 was held by some participants. Some people thought that this is an important level to hold. And if it holds, then this might be an area where silver might turn back. But let me just step back to gold for just 1 second. This situation on gold, which doesn't happen too often and doesn't always succeed, I have to emphasize that, is a situation, one of those rare occasions where you can go into a big trade with a small stop. The chances of this, let's say 50-50, I'm very humble about this. I think it's more, but let's just stick to 50-50, okay? But the reward risk is about 10-1. Okay, 50-50 with the reward risk 10-1 is a situation I'm absolutely interested in. No recommendation, it's just an analysis of price action on the chart, as always. Let's say a few words about Bitcoin here. Also, remember in the previous video, we identified this potential failure test. So far, it hasn't been violated. Actually, seems like this market might start to work its way up. And if it does, again, nothing to do yet, but we're just monitoring the situation. Okay, let's move on to treasuries. All three of them. Look at these, actually, the Market Scanner Pro, bullish hot zones on treasuries. ZB long-term, ZF 10-year, actually 5-year, and ZN is 10-year. So all three bullish hot zones and long setups, and price already extremely outside the Keltner. So the first move has been done, and we don't have to look at the charts to see this. By the way, once we are on the Market Scanner Pro, let me just say something in brackets, okay? So if you're a NinjaTrader and if you're using our software, of course you can click on these columns, you see, and sort them. Now, if you sort them, then you can see that silver, for example, comes out on top on the Remek converter, which means silver is by far the riskiest instrument at this point to trade because of the volatility conditions. You see, almost 2-3 times more risky than gold itself. And the least risky is ZF and some of the other ones, usually Canadian dollar, you see. So if you have a small account, you have to look at opportunities on these low-risk instruments. Okay, so ZB, look at the weekly time frame on which we forecasted this trigger. So you could be, probably should be long on the weekly time frame already. But I put a note here. Can you read this chart? Now, what do I mean by this? Well, I wrote this to myself too, but I'm asking you as well. This is just a little practice. So what is happening, what has happened, what is happening, and what we expect to happen next on this chart? These are crucial Remek trading skills. Remek meaning excellent in Hungarian. So the first touch of the Keltner has happened. If you did these longs on the 4-hour charts, then good for you. You see the smaller time frames gave us opportunities to participate in this move on the daily as we traveled up to the Keltner. Now we did touch the Keltner. What's next? Well, the next is, as usual, we expect a pullback here, a consolidation area to be built, which might take 2, 3, 4 days, who knows? Sometimes it doesn't get built. If it doesn't get built, I'm not too interested in trying to participate, but if it does get built, that's when I really get interested. And that's when I'm going to, and this is what our software mathematically calculates automatically, is identify a area of business, which I usually mark up with a circle. That's when we usually expect the trigger to arrive, roughly. And then I indicate the expected direction of price. And this is the train we want to be on. So this is what I'm expecting. And this is all before anything happened. You see, the only little sign here is price penetrating, violating the Keltner channel. No real big difference. And ZF, 5-year Treasury. Same thing. Okay, we've done that. And what else is here? Let's talk about ZL, on which there was a little hesitation around the 1-hour target. You see, we have hit it already, and no real sign of weakness. Actually, a bull flag has triggered on the 4-hour chart. So most likely this market will continue to move to the upside. There is a little bit of room to go, definitely up to 72 or so. Also, let's look at wheat, the other market we looked at, the other market on which we are long right now. About 0.8, we touched the Keltner, a little pullback, good long trade. Now, if it gets to 0.8, almost hitting the 1 hour, then by that time, if you do it with BT or software, then your trailing stop has been already tightened, and probably you're out of this trade with a 0.8 or so R win. If this triggers again for another long trade, that's a new trade, and a good one, most likely, because we're still targeting 570. So a little longer than usual, a little bit more rambling than usual, but it is what it is. We'll be back in the morning, and until then, mindful trading.